I'm one of the original organizers of Crypto Monday in London, along with Caitlin, and we've been joined over the course of the last 2.5 years by Oleg and Devin. It's been a real interesting journey, I'd have to say. We started Crypto Mondays here at the encouragement of Lou Kerner, who runs Crypto Oracle in New York and who was our last speaker, actually. Lou has co-founded Crypto Mondays all over the world, and we picked up the baton, so to speak, for London, and it's been going very well. And virtual Crypto Mondays have actually been very successful since lockdown, and I think we've been fortunate to get both a hardcore of loyal members of the group who continue to come, and I can see a lot of new names tonight as well, people whose names I don't recognize, and we appreciate your support. Normally we'd be standing around in a very large room, a consensus, drinking beer and wine and eating some very nice snacks, courtesy of our sponsors who will be speaking to us shortly, Morgan from Vantage. But in the meantime, I'm just pleased that everybody's here. What I would also say to you is that if you, as a member of the group, have a subject or a theme that you would like us to explore at some future point in time, drop us an email, or the best thing to do is via Telegram. We have a Crypto Monday Telegram group, easy to find. Just drop us a note if you've got any ideas about things you feel we should be covering or looking at. We'll look around for speakers, or if you've got speaker recommendations, please do that as well. I'm going to pass you over to Oleg, who's going to be our moderator and host tonight, and he'll introduce tonight's speaker. Thanks.
Thank you very much, Larry. Even before we introduce the speaker, just if I'll pass the word to Morgan from Vantage Recruitment, our sponsor, to say a few words. Thank you, Morgan.
Thank you, Oleg. So a quick one from us. My colleague, actually, Alex, is here as well with me. We got involved with Crypto Mondays the 10th of last year. We're just eager to learn. We are recruiters, so it kind of helps, goes hand in hand, and we get a chance to meet with our network and actually get some FaceTime with them as well. We specialize in blockchain, so it goes without saying, if there is any interest or need to get in touch with us, I'm going to post my email address into the meetup page after or later on tonight anyway. But besides that, looking forward to tonight's talk with Philip, and I hope to see some more of these faces and meetups to come.
Fantastic. Thanks so much, Morgan. And just two quick words from me also about CoinRoom, my company that is effectively also a sponsor. We are the most easy tool in the cryptocurrency market that helps users to automate their trading strategies. So if you are currently trading cryptocurrencies on any public exchange, or if you're looking in the future to also trade non-crypto assets, you will need a tool that helps you to really navigate the markets. And CoinRoom is there to help you. So you can check us out. And of course, if you're curious, please drop me a message. Now to the most exciting part of the evening, which is the talk of Philip. Philip, of course, as you all know, he's the chief economist at Chainalysis. Chainalysis is the leading blockchain data and analytics firm. So any kind of financial institution, government, exchange, or any other possible company that wants to actually understand what's happening on the blockchains, what kind of transactions, and so on, ultimately go to Chainalysis. Philip's expertise lies in analyzing the data and understanding what actually is happening in the cryptocurrency markets. This includes identifying economic fundamentals, how the currencies move on chain between exchanges and across borders, and also to track, which is very interesting, crypto-related crime. Prior to joining Chainalysis, Philip led a team of economic consultants who worked globally on energy system analysis and climate change economics. And with that, I would pass the word to Philip, and please feel free also to add whatever I may have missed out, Philip.
Cool. Thanks very much for the kind introduction. And it's a real pleasure to be here. And shame we can't be here in person, but I guess it means that people from all over the place can join. So, hey, and welcome. Cool. Well, tonight I'm going to talk about how Bitcoin is actually used. So I'm just going to kick off. Am I able to share a screen? Is that possible?
I think you should be able to.
Philip, do you mind also to speak up a little bit?
Yep, no worries.
Check now.
Okay, looks like, yeah. How's that for volume now?
It's good on my side.
Perfect, cool. So hey, can see a deck. And if you have questions as we go through, I actually can't see the comments thing. So we'll take most questions at the end, I think. If
Yeah,
there
don't
are...
worry about the questions. I'll keep an eye on that and then I'll pass them on to you at the end.
Perfect. And like, if there are any questions for clarifications I go through, feel free to pop them in and then we'll have a discussion at the end. So great. So we're going to talk about how Bitcoin is actually being used, and really short agenda, just give a little introduction about, why I'm able to talk about this given the work that we do at Chainalysis. Then I'll actually talk about how is Bitcoin used? Are people using it as a means of investment or a means of exchange? Give some data, some numbers that actually back up, those narratives that we hear about in the industry. I'll talk briefly about the scale and nature of illicit activity. Bitcoin is often known for it. It's actually not really the main thing that's going on in Bitcoin anymore. And I'll talk about understanding exchanges, because actually, centralized exchanges are where most of the on-chain activity is. And then just end with some key takeaways and then go into questions. So give a little introduction. Chainalysis, as Oleg kindly mentioned, we're the blockchain analysis company. We serve customers across law enforcement, cryptocurrency businesses, and financial institutions. I think if you're wanting to actually look at the data about what's going on the blockchain, we are the place to come. And the reason for that is because we actually map Bitcoin addresses to services. So if you actually were to look on the blockchain, you would see something like on the left. So that's actually a screenshot from blockchain.com's block explorer. You just see all these letters and numbers, and they're actually the Bitcoin addresses. And they're not very meaningful if all that you see is that. But what we are able to do is we're actually able to understand that set of addresses belongs to a particular entity. So for example, in here on the left, those are actually a set of addresses that belong to Coinify, and they're making a transaction, sending some Bitcoin to Bitstamp. Now, services can actually have tens of millions of addresses, sometimes actually getting into hundreds of millions now for some of the very largest. And so if you don't do this mapping, it's very hard to really see the wood from the trees. It's also important to say that our focus is actually on understanding the named sets of addresses for services. So individuals, actually, there's no real concept or in our system of sort of Philip's Bitcoin wallet, because we don't have that mapping from an individual name to the addresses they control. We might be able to understand this set of addresses looks like it belongs to a personal wallet, but it's this sort of personal wallet A, personal wallet B. We actually don't get that link. The reason why we can do that for the services is because you can actually go and make an account on Bitstamp, send some Bitcoin there, and confirm that one of those addresses belongs to that service. Because we do this, that allows us to not just see the addresses, but actually think about the entities, the people and the businesses that are moving money around. And that's really what is in the analysis that follows. So how is Bitcoin actually used? I think there's three questions to understand this. You need to understand, first of all, how is Bitcoin held? How much flows around and why does it flow around? And how many people do we think are actually involved in the Bitcoin community? So there's about 18.5 million Bitcoin that have been mined to date. Around 62% of that, so about 11.4 million Bitcoin, we believe is actually held for investment. So that means it's held by people who've held it for a relatively long period of time. And it's also held in wallets where most of the Bitcoin has only ever been received and they never really send any Bitcoin out. So it really is people who have this pattern of just drawing that Bitcoin, say, from an exchange and keeping it and holding it, and they don't really send it on. And that's the big use. So when people talk about people using Bitcoin as digital gold, that is what I see in the data. There's about 20% of Bitcoin that we believe is likely to be lost. So about 3.7 million Bitcoin there. 1 to 2 million of those Bitcoin belong to Satoshi. Satoshi may come back and move the Bitcoin. Very recently, there were about 50 Bitcoin that was moved from an address that had first received those Bitcoin from mining in February 2009. Unlikely to belong to Satoshi. Certainly, we would have thought it was previously lost because it just hadn't moved for such a long time. So it's not necessarily lost, but the people that hold this Bitcoin, they just haven't interacted with the market for years and years and years, even as there have been such large increases in price and developments. So we really think they're just out of the picture unless something extraordinary happens. So we're now talking about 82% of all the mined Bitcoin is either investment Bitcoin or lost Bitcoin. The remainder is what we call the trading Bitcoin. And this is the Bitcoin that actually moves around on the blockchain, and it's the Bitcoin that people are really fighting over in the market. So when the price falls as it has today, that actually means that there's more people trying to sell that trading Bitcoin that want to be buying it. You do get times where investment Bitcoin actually moves into the trading Bitcoin. So you saw that in the 2017 price rally. Lots of Bitcoin that had been sitting there for a long time suddenly went to exchanges, started moving around. And then since say 2018, the number of trading Bitcoin has actually decreased a bit and more went into the investment side. Then of course you've got some Bitcoin that remains to be mined. But crucial thing here is it's a really small amount relative to say the amount of Bitcoin that's being held for investment. So for me, when you just had the halving, people worry, where is all the Bitcoin going to come from? I actually think it's going to come from the people who've been holding it for a long time. If price rise, they might be willing to actually send some of that Bitcoin from the investment bucket into the trading bucket. And just to give a bit more color to that, we can actually see that 54% of all Bitcoin has been held for more than a year. There's a very small amount of Bitcoin that's been held for less than 2 weeks. So you get, a small amount of Bitcoin, moves around a lot. Get another, roughly half that's been sitting there for between 2 weeks to 52 weeks. But then actually the majority of Bitcoin has been held for more than a year, often for sort of more than 5 years. It's also important to understand, where are people keeping their Bitcoin? Well, of the available Bitcoin, which we think of as the mined Bitcoin minus the lost Bitcoin, that's actually held by what's called virtual asset service providers. And it's a bit of a sort of a technical term, but it's one that's coming into the industry. And it really means any service that offers third-party custody. So for example, if you keep your Bitcoin on an exchange, it's a VASP. If you actually keep your Bitcoin in a hosted wallet, that's also a VASP. So at an upper bound, we think that 60% of all available Bitcoins actually held by these third-party custodians. And even for the Bitcoin that's not held by VASPs, well, actually, most of it, 87%, has passed through those VASPs. And that just tells us that most people today actually acquire their Bitcoin from exchanges. Now, I've talked about the stock of Bitcoin. Where is it being held? Mainly held for investment, mainly held on VASPs. And if it's not held on VASPs, it's often being acquired by them. But what about the Bitcoin that moves around? So in 2020, on average, there's about 1.8 million Bitcoin was transferred per week, worth around 14.4 billion, depending on the price. And most of it, really the vast, vast majority of it, is moving between exchanges. So you've got most Bitcoin held there for investment, but the Bitcoin that's moving, it's actually moving around for trading. Well, in terms of the Bitcoin users, I think it's important to split it into what are called the weekly active users. So those are people moving it around, and the owners, because remember, so much Bitcoin is actually being held for investment. Now it's easier to get a picture of the weekly active users because we can see their activity on chain. And we have sort of a couple of definitions to get a handle on this. We can look at the number of entities that we think are actually active, moving, say, Bitcoin from, say, their personal wallet to somewhere else. There's around 300,000 of those per week. In terms of people making deposits on exchanges, there's about 340,000 of those per week. So you're looking at, a worldwide community of Bitcoin users who are active every week in the sort of 300,000 range. There are far more people engaging with Bitcoin every week, though, purely via the websites of exchanges. It's actually around 5 million users per week. But most people are holding Bitcoin. So if we look at the owner side, it's harder to get a handle on this because there's some uncertainty. Is this set of addresses that hasn't moved Bitcoin for a really long time? Say there's 10 of them. Do they all belong to one person or to 10 people? But we think there are at least millions of people who are actually holding Bitcoin on chain. It's probably in the sort of low single-digit millions rather than the tens of millions, but we do see tens of millions of people holding Bitcoin on exchange websites. So that's people who made a Coinbase account, they wired some money through, and then they sold their US dollars and bought some Bitcoin, but they never actually moved anything on chain. There's a third way in which people are now starting to own Bitcoin through these exchange traded products or also trusts like the Grayscale Bitcoin Trust. We don't know how many people are involved in that, but it's likely in the order of tens of thousands. So I hope that gives you a big picture of how many Bitcoin users we think there are, and in the sort of different ways you can slice up their activity. So summary, most Bitcoin held for investment, most of it on VASPs. I hadn't really talked through the data on this, but the ownership is actually quite concentrated. So there's obviously a small number of independent holders who actually own quite large amounts of Bitcoin. And they're a mix of these early adopters, high net worth individuals, and some trading companies, some of these over-the-counter brokers, for example. Then the Bitcoin that moves, about the fifth of that regularly moves, mostly moving between exchanges, and that generates this about $14 billion worth per week of economic activity. And there's probably hundreds of thousands of people responsible for that. And of course, there's the fifth that's likely lost. So moving on, in terms of illicit activity, so Bitcoin has got a name for being used in illicit activity, and that was really most earned in sort of 2013 when the Silk Road was really the first use case of Bitcoin. But illicit activity is around 1% of the total transaction volume. So while it's large in absolute terms, in 2019 it was about $11.5 billion, it's still a real small minority of the overall activity. That's because most of the Bitcoin that's moving on chain is actually going to exchanges. Illicit activity did reach an all-time high in 2019, and that's actually largely due to some scams. So in 2019, there were some big scams such as Plus Token, these Ponzi schemes where people say, send us some Bitcoin and we'll send you lots back. And unfortunately, I think people do really fall for that because there are some real get-rich-quick stories in Bitcoin. Early adopters really did make great returns. And so when people start advertising this, it's easy for other people to fall in. And I think it's an important thing for the community to really fight against scams and educate people and say, look, if it looks too good to be true, really think carefully about it. I should note that OneCoin, especially in the UK, has had a lot of popularity because of the Missing Crypto Queen podcast. That was never on a blockchain, so it's not a scam that we count. And it also happened earlier than 2019. But if we remove scams from the flows of illicit activity, actually, the flows of illicit activity are very similar to the amount of Bitcoin that's going through merchant services. So these are the payment processors who, if you say went to buy a cup of coffee with Bitcoin, would actually pay the coffee shop in pounds and sell the Bitcoin on their behalf. And I think that's really interesting. If people say, oh, illicit activity is all that happens in Bitcoin, you're like, well, actually, people using Bitcoin for illicit activity, scams aside, is as popular as people buying a cup of coffee with Bitcoin. And they might say, well, that doesn't happen much either. Like, well, that means the illicit activity problem's not so serious. I think an interesting thing is exchanges have increasingly been an off-ramp of illicit activity in 2019. In particular, that was because people were cashing out these Ponzi schemes, and they were largely doing that through these rogue OTC brokers. So OTC brokers will buy and sell large amounts of Bitcoin bilaterally, so they won't put it onto a centralized exchange because the liquidity doesn't exist to sell or buy that much without moving the price. And some of the money launderers, they put some of the Bitcoin that they had acquired illicitly through these OTC brokers, mixing it in with legitimate trades that were going on. And what's interesting is, we reported this back in January of this year, and actually quite recently, the Chinese police did freeze a lot of OTC brokers around some of these issues. So overall, illicit activity, it is real, and there is some very serious illicit activity that does happen. But scams have been the main illicit activity in terms of dollar value. Overall, it's about 1% of all the value transferred on chain. Removing those illicit activities, about the same size as merchant services. And the laundering has increasingly happened through exchanges, although a small number, and often via these rogue OTC brokers. So what about exchanges? To understand exchanges, for me, there are three key questions. Which exchanges are the most important? How important are the fiat connections? And are the participants in markets generally retail participants or professional participants. So I should say here, I'm talking about centralized exchanges. Decentralized exchanges are really not very big. There are 4 exchanges that dominated the market. They received 40% of all the Bitcoin received by exchanges in 2020. They're kind of the obvious ones, sort of Coinbase, Huobi, Binance, Bitfinex, perhaps more in sort of 2018, 2019. But the next 10 largest exchanges, they received 36% of all the Bitcoin that flowed between exchanges. So you've got about 14 exchanges that are receiving over 3/4 of all of the Bitcoin that flows between exchanges. So that's actually quite a dominated, concentrated market. But then there's a long tail of exchanges in this sort of other exchanges gray bar that we have there. There are actually hundreds of exchanges in there. So you've got a few large ones and then a very long tail. And there's, different types of exchanges, right? So there's your crypto to fiat exchanges where you can wire in your pounds or your dollars and you can buy crypto with that. Or there's what we call the crypto to crypto exchanges. So for example, like Binance, where they do have some fiat payment options, but actually most of the time people are sending crypto to them and trading other cryptos. And then there's the derivatives exchanges as well. Here I'm talking about the sort of pure derivatives exchanges like BitMEX, not talking about, say, Huobi's futures option, because they are also a crypto to crypto exchange. We can't actually split out the two at this moment. All those classification things aside, the key message is that actually crypto to fiat exchanges are really central to the exchange ecosystem. So they are one counterparty in around 3/4 of all of the flows between exchanges. And I think, at least for me, when I looked at this data, that was surprising. We often hear a story of, look, actually everything's happening on the crypto to crypto exchanges, there where the action is. Actually, most people in the industry are still connected to a crypto to fiat exchange. And I think it is because people onboard into Bitcoin via the crypto to fiat exchanges. They're sort of sending fiat in, and that's therefore where they come in and out of the blockchain. That has been a structural shift. Here, this chart, I'm showing the cumulative net Bitcoin flows between your crypto to crypto exchanges and your crypto to fiat exchanges since 2018. And what we've actually seen is around 900,000 Bitcoin has moved out of the balances of the crypto to crypto exchanges and moved to the crypto to fiat exchanges. And if you go back further in time in this chart, you actually see that there was a lot of Bitcoin that went from the crypto to fiat ones to the crypto to crypto exchanges. For example, as Binance really grew, a lot of Bitcoin went that way. As there was a big ICO boom, a lot of Bitcoin went into those exchanges. And actually, since the sort of middle of 2018, it started to go back the other way. And we're now seeing Bitcoin go back to crypto to fiat exchanges. So a structural shift actually, in the last sort of 18 months. So what about retail versus professionals? Well, we can look at the number of transfers that exchanges receive each week, and we can group them into different sizes. And so here we're looking at, was the transfer for less than $1, or was it for between $100 and $1,000? And if we think of retail as people making deposits of less than $1,000, we can see actually that they are driving the majority of the transfers that exchanges are receiving. So around 1 million transfers received by exchanges each week. 750,000 of those are for less than $1,000. So it's actually quite a big, retail participation, certainly in terms of the number of transfers. However, retail is not moving the majority of the value. If we look at transfers of worth more than $10,000, well, actually, they are responsible for 85% of all of the dollars or dollar value worth of Bitcoin that is moving into exchanges. So you've got the people that are sort of moving the big money. They're moving it in large amounts and they're putting most of the value into exchanges. So you've got this large number of retail participants who are moving in small dollar amounts, and then you've got a much smaller number of transfers actually coming in, but moving most of the money. And so I think the professionals really control the liquidity. And this are traders who, for example, are rebalancing a portfolio of Bitcoin across different exchanges to take advantage of arbitrage or exchange price fluctuations, or the different products that these exchanges offer. I do also think there's an interesting way that we can use the on-chain data to understand the trading data. So big story, I think, in crypto is that, are exchange volumes accurate? Can we trust this data? Well, I think it's quite easy to trust the on-chain data. If you wanted to fake your on-chain Bitcoin movements, you'd have to have a lot of Bitcoin. You'd have to send it around. And there's costs to that. There's risks to that. You have to have a lot of it to start with. You can also spot those patterns if they look suspicious quite easily. And so what we can do is we can compare the ratio of how many Bitcoin are traded on an exchange to the number of Bitcoin that they receive. We get this ratio that we call the trade intensity. Now, all the exchanges I've shown here, I actually think have accurate volumes, but they have very different trade intensities. So I think that reveals something about their business models. So for example, if you look at Binance, it has a very high trade intensity. It means lots of Bitcoin are traded on Binance for every one that it receives on chain. And that is probably because Bitcoin is used as both the base and the quote asset for many of its trades. So people aren't just trading, Tether for Bitcoin, they're also trading Bitcoin for ETH. And so the Bitcoin is being used many, many times. And then if you look at something like Gemini, well, Gemini actually has a very large custody business. So people are sending a lot of Bitcoin to Gemini. It's not actually being traded. We also have a large OTC business, which means a lot of the Bitcoin that goes there doesn't actually end up in their sort of centralized trade order book and then reported out. So it has a very low ratio. Then we've got Huobi and Coinbase, for example, as comparators there. Somewhere in the middle with a mix of those business models. So for me, this is just a nice example of where we can actually use the on-chain data to look at other big questions that people have. So brief summary of this, because I've talked a lot. Exchanges, main origin, destination of the flows, most of it actually coming through a small number of these sort of top exchanges, most of it through crypto to fiat exchanges, the structural shift of more Bitcoin now flowing from the crypto to crypto exchanges back to crypto to fiat since mid-2018. And then actually there is reasonably large retail participation, but it's the professionals who are really moving most of the value. So just to kind of go, summarize quickly, and we'll go to some questions. If you really want to take anything away, is that around 3/5 of all Bitcoin is held for investment, probably by tens of millions of people. Majority of that is being held on third-party VASPs. Trading is the next biggest use case of Bitcoin. It's around 1/5 of all Bitcoin, and it is responsible for generating flows of around $14 billion per week. Most of that is going between exchanges, in particular the crypto to fiat exchanges. And they have a retail market of millions of people. Most of those staying on the websites, but some of those people, hundreds of thousands of them, actually being on chain. Illicit activity, while some of it is very serious, it's around 1% of all the value transferred on chain, and scams are the most lucrative. But it's about equivalent to people buying, cups of coffee with Bitcoin if you exclude those scams. So cool. I hope that was interesting and would love to dive into questions.
Thanks, Philip. Thank you so much. This was very interesting. Definitely a lot of really interesting data that I was not personally aware of before. We're actually being asked quite a bit if you would be able to share the slides with the community. Is it
so we're actually going to put this on a blog either tomorrow or Wednesday. Yes. I'll share the link of that then.
Fantastic. And we'll share that in our Telegram community. So if you follow us, you will see it there. Let's move to the questions. We received quite a few. Let's start with the question from Anthony Parker. How will Schnorr signatures in Taproot affect your future ability to map addresses to services? Do you also see a proliferation of conjoin in the future?
Yeah, so all of these technologies are essentially ways of making the Bitcoin protocol more private. So it is harder to actually understand that this address and this address were controlled by the same sets of people. So, I mean, yes, they will affect our ability to map addresses to services. I think services is actually going to be easier than understanding the sets of addresses that belong to individuals, because services often will have quite strong patterns, even if there are things like Schnorr or Taproot upgraded on the protocol. Because the services essentially are generating addresses in a very programmatic way. There is rarely a human, for example, behind initiating a withdrawal set of transactions from an exchange. Things like CoinJoin, we're definitely seeing a growth in CoinJoin transactions. And I think it will make it harder for us to understand, but there are ways in which you can trace through coin joins and so on. I mean, I do think, honestly, and it's something that sometimes is strange or not expected from someone at Chainalysis to say, but Bitcoin is too transparent as it is at the moment. So I do think these things are necessary for its wider adoption. I guess the one thing that I worry about as the sort of chief economist is I think it's really useful to be able to show this type of data. And I want there to be more sort of individual privacy, but I still want us to be able to tell a story about Bitcoin at that sort of macro level. And I guess the final thing I'll say on that is if you do want to understand more about how we think about things like Schnorr signatures and Taproot and CoinJoin in particular, there's actually a webinar on if you go to blog.chainalysis.com, where we talk through some of these.
Brilliant. Then a question from Morgan. Do you see the growth of crypto custodial wallets being offered by some companies as an important move in the right direction?
So I think my answer to that would be, if you think the future of crypto or Bitcoin in particular is as digital gold held by larger financial institutions, then they absolutely will need third-party custodial wallets to hold them as sort of financial assets on behalf of their investors. I do think if you're thinking about private wallets, I think improving the UX of personal wallets is kind of the way to go, and that will help a lot. But people are free and welcome to use third-party custodians. Like the majority of people are doing that at the moment.
Then one question from Judd, which is probably something that interests all of us. What info does Chainalysis have about Silk Road and about Mt. Gox?
I mean, I guess quite a lot, because Chainalysis was actually involved in both of those investigations. So actually, Mt. Gox was how Chainalysis got started. At the time, Mt. Gox was sort of a meltdown for the industry. And so a lot of people from different exchanges tried to help. And Michael, who's our CEO and co-founder, he was actually the chief operating officer at Kraken at the time. And he got involved to try and help. And he was like, but we can see on the blockchain where the Mt. Gox coins are going. And so the very first version of our software was actually built explicitly to help with that investigation. We don't know anything that isn't already being used to try and resolve that case. So, I guess everything, we've helped as much as we can, I guess, but we still keep an eye on trying to resolve that issue, I guess.
And then a follow-up question from Jad. How do you identify illicit transactions, and is money laundering included in your analysis?
Yep, so this is a good and helpful distinction to make. So we identify illicit transactions by identifying addresses that are controlled by businesses or individuals who are engaged in illicit activity. So that could be a darknet market, and for example, that would actually be the wallet addresses of the darknet market. It could be a scam like Plus Token, where we identify the addresses that the funds go through. It could be a set of ransomware addresses that we collect in various ways, where we can see the ransom payments that have gone through. And so it really is about what we call on-chain crime. That is different, for example, from someone taking some illicit dollars, using that to buy Bitcoin, sending that Bitcoin to an exchange, selling that, and then getting clean dollars out the other side. That type of money laundering is harder to understand and is not included in the statistics that I shared. I should say on that, we think there probably is some of that. It's not of enormous scale. There's only $14 billion being transferred each week. That's a lot of money. But if you talk to big fiat institutions, they're like, you can't hide much money laundering in $14 billion worth of transaction volume. It's still definitely an issue, but I'm not sure it's the kind of biggest risk in the space.
And then, thanks. And then a question from Morgan again. Does Chainalysis have any data or info on the usage of BTC debit cards such as Coinbase's offering? Do you think this will help bridge the gap between retailers and customers and drive further adoption?
Yeah, so not explicitly. So this is kind of one of the, blockchain analysis is actually quite hard to get a really like micro view of that type of thing, to be like, oh, that looks like debit card transactions, especially if it's offered by a service that has multiple other sort of blockchain products. So for example, like in Coinbase, they probably run their debit cards out of the similar wallet that they use for their exchange. So there we can't really get a handle on that. Do I think it helps bridge the gap between retailers and customers and further adoption? I mean, the thing is, so many people are actually holding their Bitcoin for investment rather than to use it as a means of payment. May change with Lightning and so on. Maybe actually adding these things like debit cards reduces some of that friction. But actually, I think the perhaps more interesting story there is people who borrow dollars off the back of their Bitcoin, and then they might use that dollar, you know, for their sort of day-to-day spending money. But they're trying to keep hold of their Bitcoin asset by essentially taking a loan out on it rather than selling it.
Interesting. Then one question from me. One thing that also stood out for me was that actually the data of merchant-related transactions seemed to be pretty consistent over the last like year or two, which is probably not great news if you want to think of Bitcoin as something that would be used for life, but might be good news if you think of it as digital gold. Can you compare that usage pattern to other blockchains and other coin projects? Is there a project that you see has more use cases among merchants, or is it the same pretty much for all coins?
Yeah. So if we look at something like Tether, there I think there's much more evidence of sort of retail or merchant-like payments. We don't have sort of quite as high confidence, but the pattern of transactions looks a lot more like that. Like you see far more transfers for less than $100 or for $10. And so I think there is some argument that people are actually using it more as day-to-day cash, perhaps because it is a more stable asset. It isn't digital gold. So I think in Tether, that's sort of the most likely. I think in the other blockchains, I mean, all our analysis does go across all the different blockchains, and we do now cover most of them. I haven't run all of these numbers on those different blockchains, but we will actually relatively soon be putting a set of 15 metrics on our website, actually, relating to all the types of things you've seen in this presentation for like Bitcoin and Tether and Ethereum and Litecoin and Bitcoin Cash. So that will be kind of in the next month or two.
Brilliant. Then a question from David Moore. Do you gather data on random users or just ones of interest? Would you keep info on the identity of a random small Bitcoin holder?
Yeah, so we don't actually have the individual identities of, you know, sort of private individuals, really for two reasons. One, it's actually really hard to get because if you generate a Bitcoin address, there is no link between that and, you know, my name, Philip. So, you know, even if we wanted to gather that, we wouldn't be able to. Now, obviously, exchanges have that. For example, when you do your KYC, and then they know that, you know, this deposit address is connected to this set of KYC documents, or, you know, there are other ways in which, say, like a law enforcement agency might come to understand this address is connected to this person. But as Chainalysis, we don't, you know, actually have an interest in the individual, you know, names of people holding Bitcoin. Instead, our software is used, for example, by an exchange to say, okay, we know this person gave us these KYC documents and they've deposited this Bitcoin. We'll then use Chainalysis software to kind of trace back and check the source of funds. So we aren't doing that job of actually checking on sort of an individual. You know, that's what our customers do. But that means we don't have that personally identifiable information.
Then one question from Devon. Have you done an analysis or comparison analysis of usage across other protocols, i.e. Ethereum versus Bitcoin?
So, I mean, like not to the depth that I would like to. You know, we've been building a lot of stuff to do that. So that's all, as I mentioned, sort of coming soon. I think the kind of big differences is, you know, Bitcoin is held as gold a lot more. Once you start getting, you know, Bitcoin is just much larger. There is an order of magnitude more activity on Bitcoin than on other cryptos. Tether is actually kind of the most active next crypto and Ethereum kind of compete. Once you start getting out of the major cryptos, on-chain activity really does start to tail off. I think that's the kind of clearest comparison I can give.
Thank you. Now a question from Jad. How does Chainalysis make money?
Yep. So we sell software licenses. As I mentioned, we have over 250 customers. There's like a couple of products. There's Reactor, which people use to do investigations. So if you're law enforcement and you have a ransomware case, you see someone paid a deposit, paid their ransom, and then you see that the ransomware operator wants to cash out, so you can follow that money till it gets to an exchange. And we provide the data and the sort of user interface that people can actually do that. And then we also provide anti-money laundering software for exchanges. So they need to check the source of funds as it goes in and out to be compliant with the laws of the countries that they're operating in. And so we provide that. And then also financial institutions are increasingly becoming involved in crypto. There's a whole range of ways they get involved that can go from simply kind of being aware of it and perhaps needing some training from us, or they can actually want to understand the cryptocurrency exchanges that they're banking. And so they will come to us for some information, some monitoring on that. And then sometimes they actually hold crypto themselves, and therefore they will need to do all the AML themselves, similar to a cryptocurrency exchange. And then they would use our software for that.
And then a question from Sanjay. Are all your services online?
Yeah, I mean, I guess by online, if you go to chainalysis.com, you can see everything. And I think everything is digital, if that's the other way of thinking about online. It's the nice thing about blockchain is there's essentially nothing that's physical.
Brilliant. One question that I wanted to ask specifically around the OTC trading side. I feel like that's a segment of the market where there's a lot of sketchy things happening occasionally. I mean, there are a lot of people in various groups offering OTC services, etc. Do you believe that there are big OTC transactions happening outside of the exchanges, or is it more like a myth? And what kind of type of users are these?
Yeah, so OTC brokers, I think there's a real spectrum. So that ranges from literally someone in a Telegram group being like, I want to sell 100 Bitcoin, send me your offers, to things like B2C2, who are big, actually based in London, fully regulated, FCA licensed, got a big set of professional services and a big professional offering. So there's a really big range on what is called an OTC broker. I think increasingly the market is dominated by the sort of big professional outfits. Those sort of smaller players they're just less involved nowadays. The OTC brokers, and indeed just large traders, it can often be hard to distinguish them, are an important part of the market. As I said, they're actually driving 85% of all the dollar value that's going into exchanges. And the other key thing is that they often put their Bitcoin on an exchange to trade, and then they'll take it off. And so they're actually driving a lot of the on-chain movement, and they're moving Bitcoin between different exchanges as they need liquidity or to manage a sort of trading portfolio. So I guess in short, yeah, actually OTC brokers are still a really important part of the market, but it has evolved and I think got more concentrated over time.
I think we have what might now be the last question. Actually, no, we have one more. So question from Alexander first. Alex, could Chainalysis be in a good position to provide anti-fraud or address checks to institutions that facilitate crypto payments, as in making it safer for newbies to avoid non-presumed scams? Or is this already an offering that you have?
Yeah, so we don't offer something, say, for just an individual to put an address in and get a response back, but we do offer that service, to the exchanges. So if you are buying Bitcoin off an exchange, they will have checked that it's been sourced from somewhere that's good. And indeed, if you try and send the Bitcoin off an exchange and you were to send it to a known scam address, we would at least flag that it's a scam address, and then hopefully the exchange would then, tell you that, hey, look, do you really want to send that?
And final question from Daniel McGregor. Does Chainalysis track where in the world the majority of Bitcoin transactions are happening, and has this changed over time?
Yeah, so we will actually have some reports coming out on this pretty soon, because you can, so Bitcoin transactions, they don't come with a geography sort of label attached to them. It doesn't say, hey, this Bitcoin transaction is, from London or from, New York. But if you've got, these groups of addresses that have a lot of activity, you can do things like analyze their time zone patterns, or you can connect that, say it's an exchange, you can look at where its web traffic's coming from or what types of currencies it trades. There's also what we call open source intelligence, which is kind of just information that's on the internet connected to different Bitcoin addresses, and you can kind of understand, is that written in Turkish and so on. If you can combine all that data together, you start to get a sense of, where are most of the users of a service like an exchange? And using that, we can then see flows between, customers and geographies. And, when we do that, we actually see that, East Asia, it's a very big region, but that really is most of the activity, followed by North America. In East Asia, China is still actually really active, although obviously most of the activity is happening off the mainland, Japan, South Korea, major markets. I think markets that are perhaps smaller, that people don't, that are still larger than people might expect, are places like Turkey, South Africa, and then like Indonesia, Philippines, Vietnam, Thailand, and then also, Mexico, Brazil. So there are still some quite big markets there, but they're not the sort of major ones of East Asia and North America. But we'll have some more research coming out on that. I don't know exactly when, but relatively soon.
Brilliant. On that note, I think that was the final question. If anyone wants to find you, social media or newsletter, or what's the best place to find you?
Yeah, so I'm on Twitter on Philip with 1L _Gradwell. Do sign up. There's a Chainalysis newsletter. And we have a blog where we put a lot of research. So that's just blog.chainalysis.com. There's lots of webinars, reports, lots of stuff. Like we try and get the data out there because we really want to educate people. It's kind of fun having access to the data. And so we want to share and tell people what's going on.
Fantastic. Thanks so much, Philip. This was really, really interesting. A lot of new insights for me as well, I think for all of us. I think we'll kind of do a little bit of just an open floor. If people have any questions or comments, shoot them, and we'll be running this for another few minutes to see if people want to stick around.
Cool.
Thank you, everyone,
so
for joining. Thank you so much. Philip, actually, one question. If I'm a developer and play with your data, do you have any APIs or anything that can be accessed?
Yeah, so I'm afraid we don't make our data publicly available like that. I mean, mainly because there's a lot of it, and so it's a big fire hose. And also, I guess it's commercially, it's kind of really the data set is what drives the business. We do have some academic partnerships where we do provide the data for studying things like, activity around darknet markets and so on. So actually, there's a lot of that based in London. So yeah, in some cases we will share it, but in general, it's kind of, you have to be on this side of the house, as it were, to get to play with it. But ask me questions. I'm really open to questions. If you want to learn and understand something, we can then turn it into a little research project.
Brilliant. I'll keep that in mind. Do you work with any of the other data providers like Kaiko or Messari.io, those guys?
So we actually do use Kaiko for the exchange trading data, and Crypto Compare as well. And I think we don't, we're actually in a bit of a niche in that we do on-chain data. And that actually is one of the smaller kind of groups in the sort of crypto data universe. There's maybe 3 or 4 other companies that really do a lot of on-chain analysis. Most other people are looking at the trade data.